Because, ladies and gentlemen, the smoke is getting cloudy. We got Apple down 4+% today, okay? It is down close to 20% from its all-time high. It hit just over a month ago when it was topping out at about $232 a share. Now we're at about $196 as of today, and we got to ask ourselves, seriously, is this the end of the world for Apple? Is Apple done? Is this just gonna be a basement stock now, just going down and down? We gotta really discuss this, guys, and I wanna bring out a lot of really great points in regards to this, okay? So first, we need to start out as a little history lesson, okay? This is an article here written, "Why is Apple stock falling down?" All right? This was back before Apple stock had did the 7-to-1 split, so it was like $500-something a share. It was like close to $530. In a matter of a very short amount of time, the stock fell from around close to $530 a share all the way down to around $440 a share in a very, very rapid amount of time, okay? And a lot of people were super scared about Apple stock. They could never grow. It was just like Apple had peaked. Apple had peaked. People really thought that in 2013, like that was, Apple's best days were behind the company at this point in time, okay? This gentleman that wrote this article on Forbes even brought up MySpace. MySpace, like why even bring up MySpace? If you like, that's like comparing Michael Jordan against like a kid that like plays basketball in middle school. Like, how could you even? It's just so painful sometimes for me to read other people's articles when they mention a name like MySpace in a company that's describing Apple. Like what an absolute joke, right? What an absolute joke. Okay, this article goes more into depth. Apple is a great company in almost all financial metrics. It is stellar. However, there's uncertainty over its future as a leader of the phone industry. Samsung and others have caught up, and Apple in mobile technology. It is just a matter of time before more quality apps are developed on Android and the tip of the network effects advantage. Tech industry is often a winner take all, and if you're not the one, then you are the none, okay? This guy even then goes to mention Nokia and Motorola and Sony Ericsson and how those companies can somehow be the next Apple. Like the two words that just came to my head when I just like read that, it was just like the incompetence is incomprehensible, okay? The incompetence is incomprehensible. How can you compare those companies that were literally like nobody loved Nokia or Motorola, okay? People got Nokia and Motorola phones because they were just like the phones that the carriers offered or something like that, okay? No one was like, oh, I can't wait for the new Nokia. Like, give me a break, guys. I didn't know one person that cared anything about that, okay? They were flip phones, or they were like very basic like feature phones. They didn't have computers. They it's hard to even debate that. It's like that ridiculous, okay? So that's 2013. We know what ends up happening. Apple ends up going up a lot, expanding revenues and profits over the coming years. Then 2015, it's once again the end of the world for Apple stock. CNN Business, America's favorite stock, is in bear market territory. The U.S. stock market is in the midst of a minor panic attack and is taking America's favorite stocks down with it. Apple fell around 9% in a matter of a week, okay? Experts differ on whether this stock market pullback is a buying opportunity or the start of a deeper rut for stocks. We don't know if this is the beginning of a correction or a buying opportunity, but it's way too soon to know, says this gentleman, okay? This is back in 2015. Once again, keep in mind, as of Friday, Apple plunged into bear market mode, meaning the stock is down 20% from its recent peak in April, all right? Investors are worried about everything. China's faltering economy, falling oil prices, the big question mark over the Federal Reserve raising interest rates in September. Wait a minute. Let's just pause for a second here. This is an article from 2015. We're coming up on 2019, and two of those points you just brought out are still like the thoughts on people's mind, like China's faltering economy, right? And the Federal Reserve raising interest rates. It's just interesting how the same stuff comes up back and again and again and again. And corporate earnings are just not strong enough to justify stocks at such a high level. There are way too many landmines out there, says Tim Anderson, managing director of M&D Partners. The earnings picture throughout the rest of the year isn't good enough to sustain itself. China is a major concern for Apple. The company generated nearly 30% of its overall sales from China. If China slows down more, it will definitely hit Apple's bottom line. Investors are also watching iWatch, which I don't know why they called it iWatch. It's always been called Apple Watch. Come on, CNN, get your stuff together. Sales closely. They started out strong, but there are reports that they haven't been sustaining the usual Apple Apple enthusiasm there, okay? That was an article from 2015. Once again, it was like the end of the world for Apple, and then it wasn't the end of the world for Apple. Then we go into 2016, 3 reasons why Apple stock is tanking right now from Time. 1, iPhone sales are down 16%. That's the product's first ever year-over-year drop. The Cupertino, California company makes up around 65% of its revenues from selling iPhones, so any fall off in those sales is a problem. There are 2 clear reasons for declining iPhone sales. First, wireless carriers are killing off their hardware subsidies. That means many people are feeling the full cost of the smartphone for the first time, leading some to keep their devices for longer periods without upgrading. Apple is trying to fight this effect with kind of a leasing program, but how successful that effort is going to be is unclear. All right, the second part was Apple predictions about its business are weaker than expected. Apple only expected $41 to $43 billion of revenue in the upcoming quarter, when analysts had expected $47 billion. By the way, if you're just curious, Apple ended up doing $42.4 billion in that quarter. They had earnings of around $7.8 billion. And then the third part was they bring out growth in China is slowing big time. China is Apple's second biggest market, and it went to a negative growth rate, okay? So it was actually going down there, all right? And so that's kind of the history of, let's say, the last 5 years, okay? Now, we could have gone back in Apple in time and gone through a ton of other years where it was end of the world for Apple or they couldn't grow anymore or things like that, okay? We could have gone back. That's just like the past 5 years, kind of like the run-up. 2013, it was the end of the world for Apple. 2015, it was the end of the world. 2016, it was the end of the world. And now we're in 2018, late 2018, and now it's looking like it's the end of the world once again for Apple, okay? Apple, once again, it hit over $230 just about a month or so ago, and now it is around $196, close to a 20% decline, down 4+% here today, okay? Why is it falling so much again today? Well, Apple slides after one of its facial recognition suppliers cuts its outlook, hinting at weak iPhone orders. Apple shares fell as much as 5% Monday morning after one of its facial recognition suppliers cut its outlook, citing a reduced shipment request from a large customer. Lumentum, a manufacturer that makes lasers capable of sensing 3D, announced the reduced outlook on Monday. The company creates components for the front-facing camera of Apple's newer iPhones that enables Face ID and augmented reality. The report builds speculation around the success of Apple's latest iPhones as the holiday season approaches. Last week, Nikkei reported that Apple stopped a production boost for its iPhone XR. In a statement, Lumentum president and CEO Alan Lowe said, "We received recently a request from one of our largest industrial and consumer customers for laser diodes for 3D sensing to materially reduce shipments to them during the fiscal second quarter for the previously placed orders that were originally scheduled for the delivery during the quarter." In Lumentum's annual filing for fiscal 2018, it listed Apple as its largest customer, accounting for around 30% of revenue. However, Lumentum did not mention Apple by name in its report Monday. In a note Monday, Wells Fargo gave Apple a market perform rating and said investors should consider Lumentum's updated guide as reflecting as much as a 30% cut in Apple orders, okay? And this has hit all the Apple suppliers bad today. We've seen Apple suppliers down anywhere from, let's say, 3 or 4% to up to Lumentum's situation there, down over 30% today. We just seen Apple suppliers just get absolutely destroyed. Apple stock is getting destroyed. And the question that comes to mind is this a buy the dip or is this a no? Now, first off here, before I get into my points I want to bring out in regards to Apple, let's just acknowledge for a moment that every single buy the dip opportunity in the last 20 years for Apple has made you a lot of money, okay? Every single buy the dip. If you bought the dip in 2017, 2016, 15, 14, you go back all the way to 1998. Every single time you would have bought Apple shares on the dip, you would be up a lot right now, okay? Every single time. So this could be the first time ever in Apple's history where buy the dip doesn't work out for the long term. But in my opinion, I think honestly buy the dip will work out on a long-term basis. If you're basing things off of where the stock goes in the next 6 to 12 months, who knows? But if you're basing this off of the long term, in my opinion, you have a lot of really good things going for Apple right now. First thing is 5G is coming. For all the talk that iPhone can't expand anymore and they can't sell any more units, in my opinion, when 5G iPhone comes, that will be the next major growth vector, the next super cycle for iPhone, in my personal opinion, okay? Every time you go a step up from 2G to 3G, from 3G to 4G, we've seen super cycles for iPhone and also Samsung and everybody that plays in the high-end space in smartphones, okay? Right now, as of right now, iPhone doesn't have anything that's making people say, I've got to go get this new iPhone, regardless if I need it or not, okay? Obviously some people buy new iPhones and new Samsungs every year, don't matter what. You always have that segment of the population. But as far as the masses, as far as someone like myself that say, let's say that, I just got an iPhone about a year ago, are we going out there and saying, we got to get the new iPhone? No. However, when the 5G iPhone comes, in my opinion, that's going to be the next major growth vector. It is possible it comes in fall of 2019. If not, it looks like fall of 2020, more than likely the 5G iPhone will come. And in my opinion, that will be the next super cycle for iPhone overall, all right? Also, services is expanding still very rapidly. Services, all those things, when people buy apps or buy things from apps, all that type of stuff makes Apple money in the end. And this is a business that's been expanding consistently between 20 and 30%, even upwards of 30% in some quarters. And it's like a straight profit engine for Apple, okay? As people get used to spending more and more things, more and more money on things like Netflix or the Spotify's or Apple Music or maybe video services Apple has coming in the future. So many different things. All this and obviously all the gaming that's done on mobile apps and whatnot, all this is massive expansion still for the company, and it's almost all straight profit. The next major expansion category for Apple is the other products category. This would be things like the new Apple Watch Series 4, which we've seen very high demand for. As far as it looks like a lot of people actually want that Series 4. It's probably the first Apple Watch that is going to see a lot of mainstream demand and not just people that are kind of like the newest technology. Things like headphones and whatnot, all these other products are expanding very rapidly. We see that in the revenue numbers. We see that in the profit numbers for this category when Apple breaks those numbers out, guys. So other products is definitely a big thing. New Apple TVs, things like the Apple HomePod that actually go in your home. All those things are massive expansion for the company. We see that in the numbers, all right? Next part is ASPs. Average selling prices are expanding quite rapidly for iPhone, iPad, and Macs, all right? iPhone, we've seen this over the past year. Now iPad is where we're going to see this next, okay? Apple right now is in a situation where they're like, yeah, we probably can't grow units that much in iPhone, iPad, Mac, but we can just try to put the best tech in it, a lot of memory in these devices, charge higher average selling prices, and make more profit on the bottom line. So that's the way Apple's looking at it right now, and this is leading to big average selling price expansion that you will see, especially in iPads and Macs over the next year, and you'll continue to see it in iPhones. We're talking about in 2019, average selling prices for iPhones should be $900 to $950. That's average selling price, okay? Never mind, some people are going to be buying the $1,400 or $1,500 iPhones, all right? So that is a massive opportunity for Apple to continue to expand on, and that's just a lot of that money goes to the bottom line at the end of the day, okay? Memory prices are now a tailwind versus this past, couple years, they've been a headwind for the company. What do I mean by that? Well, memory prices, all the memory that goes into their phones or iPads or Macs or whatever it is, okay? All that memory has been near record prices throughout most of 2018, especially 2017, and what the situation is now, all the memory prices are coming down. Apple has cited this in their conference calls, and this produces a great situation for Apple because as memory prices go down, that's just more and more profit for them in the end for their iPhones, their iPads, and everything that they put memory into, okay? So it goes from a situation where it was actually hurting their earnings to now it will be helping the earnings and make their earnings look even better than better, okay? Next part is Apple is just going to get to buy a lot more shares back for cheaper. That's a big plus, okay? If you're Apple, right? And let's say you're going to buy back $10 billion worth of shares throughout 2019. Like that's your plan, $10 billion throughout 2019. You would either buy back at $190 a share or $250 a share. Where would you rather buy if you're Apple? Obviously, if you're looking at it from any long-term basis, you'd much rather buy a lot more shares at $190 because you can afford a lot more than versus buying them at $250, all right? So if you're looking at it from a long-term basis, the buybacks are going to get to buy a lot more shares at a lot cheaper prices. That ends up helping out the EPS in the end, okay? And guess who else gets to buy for a lot cheaper prices? Mr. Warren Buffett. So from my understanding, I watched an interview back when Apple was around $200. It was done with Warren Buffett, Charlie Munger. Charlie Munger had mentioned in that interview that he thought they had been way too controlled with how much they've been buying Apple, meaning that he thought they should actually buy more aggressively, okay? More and more aggressively where, it seems like, they've been buying very, very aggressively, but Charlie Munger said they've been too controlled with their buying of Apple. Now that it drops under $200, I think Charlie Munger is going to be pushing Buffett to buy more and more shares very heavily because of their long-term outlook on what Apple can do over time and what that company can produce for returns over time, the dividends that can be paid out over the next decade or two, and things like that, okay? So if you're looking at this from a long-term basis, there are a lot of reasons to be bullish on Apple. There are a lot of reasons to think this company is going to be much bigger 3, 5, 10 years from now than it is today. If you're looking at it from what's going to happen the next 6 to 12 months, who knows out there? Who knows? You know, the stock could go lower. Maybe it goes down to 170, 180. Maybe it gets down to a situation where the forward P goes down to a 9 or 10. We've seen that on Apple a few times in the past where it just drops to insanely low levels on that forward P. Maybe it goes down to there. We will just have to see. But if you're looking at this from a long-term basis, at least in my personal opinion, there are a lot of reasons to be bullish on Apple if you have a long-term vision. That's the bottom line. Short-term vision, who knows? Long-term vision, you should probably do very well on this. Every single buy the dip opportunity in the past has worked out, in my opinion. There's no reason, when you kind of look at the facts and kind of what's coming for this company over time, there's no reason to think why buy the dip would not work now in late 2018, going into 2019, into the future, guys. So let me know what your opinion is down there in that comment section around Apple, around the markets in general. I would love to hear from you guys. As always, thank you for watching and have a great day.